Well, markets are charging. Everyone's a winner, and they'll probably keep winning too. My name's Jessica Amir, market strategist here with Mumu. It's great to have your company on this 13th day of May. Great to see you. Well, markets have sprung back to life. The US and China have struck a trade deal, and investors believe the worst is now over, with equities gaining more room to run. Let's just bring you the details and what happened overnight. We saw the Nasdaq 100 climb 4%, the S&P 500 in hot pursuit, up 3.3%. Now, both of these key indices have jumped over their 200-day moving averages. This is a technical suggestion that markets can continue to rally up. Now, the fact that we've got both of these key indices at these levels and options markets also suggesting more upside is ahead is very bullish. Now, what am I saying when I'm saying the market jumped over its 200-day moving average? Now, this is basically a technical bullish signal. And when an indice or a stock crosses above its 200-day moving average, it usually ushers in quantitative buying. And what I mean by that is algorithms are triggered and basically investment managers are forced to buy stocks. So this is why I'm saying it's a bullish scenario for stocks. But the fact is we do have options markets also suggesting more upside is ahead. If we think about the Nasdaq 100, bets are on for it to get to 21,000. So bets are pretty bullish. So the aggressive risk-on rally has flowed to other markets and regions as well. European equities also charging. Commodities doing well, all but gold. This is basically on the notion that now economic activity is probably going to ignite. If you look at the oil price, that's pretty interesting too. It's continued its rally up. It's up 3.2% in 3 days alone. It's back at $62 US. The iron ore price, that's good for us down under in Australia. It actually cracked over $100 at one point US overnight. That's a level that we haven't seen for about 6 weeks, so a very bullish signal. So do keep an eye on, of course, Fortescue Metals. Fortescue Metals, why am I suggesting that we should watch this? Well, they make most of their money from China, and of course, they're the biggest stock in the ASX 200 that make most of their money from iron ore. Of course, over 90% of money coming from the key steel ingredient. Also overnight, we saw the US dollar rally. This is basically on the belief that Trump has fueled that Buy America trade. But all in all, it's important to note that the narrative is pretty bullish. So what exactly happened overnight, and why are the trade deals sweetened, and why is everyone probably going to be a winner? Well, it's because US and China agreed to a 90-day tariff reduction while talks are underway. This is a very positive signal that the worst is over. As for the reduction in tariffs from now, it just was another big green light that equities were waiting for to continue to rally up. At the same time, remember that we have had company earnings and outlooks being far stronger than expected. So this overall bullish narrative is really taking shape now. Now, so what happened? So China allegedly removed all non-tariff barriers to China. So tick number one. Tick number two, the US will reduce levies on most Chinese imports from 140% down to 30%. Tick number three, China will drop duties on US goods from 125 to 10%. So that's the tick number three. And this is all why we saw stocks enter a bull market overnight. The Nasdaq 100 is now up 24% from its low. China-facing stocks gaining the most hot sauce overnight. If we think about who was rising up out of the most valuable stocks, Tesla, notable, it saw a very large charge. Of course, remember that Tesla make 21% of their revenue from China. They rose 6.7%, 6.8% almost. Leveraged ETFs for Tesla also doing considerably well. TSLL, that's 2 times long leveraged Tesla ETF. TSLL LR is the one that we've got on the screen. That also did considerably well, up 13.5% in one night alone. Now, the narrative for Tesla is not just about China-US trade. It's also about the other catalysts that are all coming together at the same time. Remember that Tesla is expected to launch robotaxi next month, so that's another positive signal. And they've also announced a Cybertruck, more launches as well in the last couple of days. And the other third and final factor supporting more upside for Tesla is that the technical indicators are now suggesting that they're breaking higher. So this is wonderful. But if we think about all the other businesses that are China facing and set to benefit from the reduction in tariffs, there are also those that are focused on the China consumer. So Lululemon obviously make a lot of their money from China. That's a very key growth region for the US business. Lululemon shares up almost 9% in one night. And if we think about stocks that are based, businesses that are based in the US, we saw Pinduoduo, also known as PDD. They're the parent company of Temu. Their stock also gained a considerable advantage overnight, rising up 6%. Now, all in all, big picture, let's step back, think about the Nasdaq 100. So it's on that bullish runway. As we said, it's in a bull market, up 24%, and there's lots more breadth in this that it can continue. Also note that 88 of the 100 Nasdaq stocks rose overnight. 33 gained 5% or more. 63 of the Nasdaq 100 stocks rose 3% or more. So everyone is really winning in this sweet truce. So let's have a look at the Nasdaq 100. They also did considerably well as well. Gaining substantially overnight. Amazon was the pearler of the lot, up 8.1%. It's now up 14.2% in 5 days. Meta gaining 8% overnight. Apple also doing really well. Of course, they make a lot of their money in China as well. Apple gaining 6.3%, Nvidia 5.4%. But Google's still down in the gurgler, isn't it? It's the only Mag 7 stocks down over the past 5 days. And Google is, or parent company rather, we should say, Alphabet, is 4% lower. Now, for those that missed it, we discussed this narrative about bearishness rising in Alphabet. And so it's really just noteworthy to see that that the Google parent Alphabet is 4% lower. There's lots of skeptics now coming in, basically thinking that the heyday could be over for Alphabet parent, or the parent of Google rather, Alphabet, given that they make 57% of their money from Google. Evidence is in, obviously, that Google use is diving. So for more, you can tune into the weekly that we published. So what to watch today? Well, it's everything China facing is expected to ignite. The Aussie share market futures were earlier suggesting that our market would rise 1.4% as a whole, but also overnight, another key catalyst, US inflation data. But locally, in the meantime, we will get consumer and business confidence data that could also aid in the RBA's narrative, with interest rates in Australia expected to be cut next week. In fact, there's a 102% chance the RBA will cut rates next week. Another reason why markets are expected to pick up like a hot tamale. Great to have your company. Stay safe, happy trading. Tune into Moomoo for more.